Hello everyone, this is Sahil and welcome back to the channel. Again, it's been a long time. I've not made a video for past 2 months, and yeah, but I'm back because the world has been a mess, and I see everybody's portfolio is diving, including mine, which has been horrendous and bloody. So yeah, I just wanted to come on and discuss a few things. Take that 30 minutes of my day. I'm not gonna edit this video or anything. I just woke up and just wanted to talk about whatever is in my mind. So yeah, let's address the elephant in the room, the Russian and Ukrainian conflict right now. And just my 2 cents to it, because I feel like everybody has a very negative view of Russia in this war. I just wanted to take 5 minutes of my time to discuss that and tell you guys what I think about it. So first of all, right, I think in a war, the only people losing are the ones that are dying and the ones that are losing their family members and their whole home and their their lives getting destroyed. And it's the people on the ground. It's the people from both sides, like Ukrainian and Russian, who are dying in that war and whose family members are dying in those war, their livelihood being uprooted, their house being destroyed, and all those things. But I would be very wary of calling Russia as the enemy over here, or saying negative things about Putin, because there's two sides of the story always. However, in this current world, right, with the influence Europe and US have on the rest of the world, because of the language similarities and stuff like that, you would only go and listen to them. That is how the world operates, and I think that is the power that these continents and the countries have in that. So yeah, especially US. So, but that being said, right, I think the only universal truth that exists is self-interest for any country, and because of that, you shouldn't ever believe whatever the Western media or the Western politicians say. You should always take the look on the other side as well. If you're not able to be on the ground itself, right, best is you be on the ground and see it for yourself what's happening. But if you're not, then you should always take a look at both the sides and try to come up with your own opinions, instead of just reading at the news and just being a puppet and just saying out whatever they are saying as well. Because a lot of times they're just trying to convince that they are the good ones, or they're trying to influence public opinion in their favor, so they are able to do what they want to do. And talking about Russia being bad, and all the shellings, killing of innocent civilians and all those things, I think Russia is too powerful to they are powerful enough to just destroy all of Ukraine in a matter of day or two, right? But the only reason they are not doing it is because they don't want to kill the civilians. And I think it's the complete opposite of US. You have, if you just go look at whatever US invasions that happened, they have just gone in with like cowboys just stripping apart the entire countries, from Vietnam to Syria right now. They don't really care about civilian lives. It's just when it comes to Ukraine, right, then they will be like civilians and civilians and civilian. And I think Ukraine right now is also using civilians as a shield currently. So, but anyways, let's move on from that. I think the main topic of this video should rather be how it's affecting our portfolios. So yeah, there's two sides of it. I think looking at the performance right now, right, we have already discussed the 2021 portfolio performance of mine and HSI and S&P 500, and let's look at what has happened in the past 2 months for my portfolio in 2022. So as you can see here, orange one is my portfolio, green one is HSI, and then the blue one is S&P 500. So I'm very close to S&P 500's returns at the moment, and in the negative territory, as you can see. So yeah, it's been really bad. I was hoping that being Chinese equities, they were undervalued and all, so they would outperform S&P 500 by a large margin this year, but that is not the case. And I think there's two reasons. First of all, in times of such uncertainty, US is seen as a safe haven, even though I don't fundamentally believe it is, but I think that is how the world sees it, and they try to move their money into USD and US. So it's typically putting gold aside, it's typically the US treasuries and bonds, right? However, I think as equity itself as well, you'd consider US equities as more safe than Chinese equities, or others would perceive it that way. So I think that is what is happening, and that's why S&P 500 is still able to maintain. I would expect like S&P 500 drop like a rock right now, more than 10% actually. But yet again, it's about the same as my portfolio. So yeah, but nevertheless, let's see how it goes around, how long this thing can go. But I'm comfortable holding whatever I'm holding right now. All right, so yeah. That being said, how the war really affects China, I think there's two sides to look from it. One is like the pros, and I mean, let's split it to pros and cons, right? So the pros are basically China will continue trade with Russia, and with everybody else stopping trade with Russia, the commodity and all the basically commodities, right? The prices will drop, and China actually can get it cheaper from Russia as compared to anywhere else. Actually, they will get it way cheaper than the international price. So at this point of time, when the rest of the world, like not the rest of the world, but the world that is not trading with Russia anymore, has put sanctions on Russia, will face inflation, high level of inflation. The gas prices is gonna go skyrocket, and all those things, right? I think that is pretty obvious. Whereas China, I think they are gonna see lower gas prices than what they have seen in the previous year. So that is a good thing, and high inflation would also mean that the stock prices must drop to account for the adjustment in the required rate of return. So yeah, that is some benefit, and at the same time, like this gives a lot of opportunity for the Chinese companies to move in as US companies get out of Russia, right? Chinese companies can scoop up the market share. They can also buy assets at huge discounts at the moment, because any country that is trading in USD right now is unable to trade with Russia. So I'm not sure if the SWIFT is applied, right? I forgot about it. I didn't read about it, but if it is applied already. So nobody can trade with them in USD. So only the countries that Russia accepts, or the countries that are able to trade in their own currency or Russian rubles, will be trading. And I think China will be trading in yuan, so they can easily scoop up the assets of these companies leaving, and also assets of the Russian companies that are suffering at the moment. So it's a great opportunity for Chinese companies to go into Russia. But looking at the cons, right, I think US and Europe, actually US, will take all the opportunity they can to sanction Chinese companies, and they can use this as an excuse that they are investing into Russia, and in turn they are supporting the war, so they can put on sanctions on China and Chinese companies, and that would be bad for business. At the same time, with the stronger ties now that they have with EU after this war, right, they can also influence EU to take stronger actions against China. Whereas like until now, right, you have seen countries like France and Germany, they are taking their own independent foreign policy approach rather than aligning with US. So that was a shift happening, but after this war, I think they're back to the status quo and in line with what US wants them to do. So that is a negative of this as well. I think business with US and Europe is more valuable to China as compared to Russia, in terms of like the market size that they can have. So yeah, I think if the sanctions are a worry, I think Chinese companies won't get into Russia. But if they are able to avoid that, it's a great opportunity for Chinese companies to take over the market share in Russia at this point of time. So yeah, that's how I see it. Overall, I think China is quite isolated away from this war, so they won't be affected, at least on the first level of as things go on. And if there's recession and stuff, obviously the income of the people will be affected, and the amount of things they can buy also will be affected within China as well. And also the amount of things that are shipped to US and the money that comes in will also decrease if there's something that happens in US, and things like that, right? So that is obviously an issue for China. But overall, I think it's way safer of an investment to make at the moment. The currency will hold because they're not going to see an inflation. And actually, Chinese currency is getting stronger and stronger. But it's just that the central bank, or whatever, the People's Bank of China, they try to control the price and devalue their currency every now and then. So eventually, I think as China becomes more of a consumer driven country, consumption driven country, they will let the price be free to rise, and that will be beneficial for people like me that are staying overseas. As the currency gets stronger, I get more returns in purchasing power in Singapore, and if in any other country I'm living at. So that is the kind of benefits as compared to US or Europe right now that I see, and I stay invested. However, like looking at the companies that I'm going into, in the past 2 months I have expanded my safety companies that I put into the safety basket, such as like these utility companies. China Water Affairs saw a great increase in the share price. They went up to $11 a share, 11 HKD a share. Now they're back down to $8.13. So I took some money out of this China Water Affairs and put it into other companies like China International Holdings and China Everbright Environment, blah blah blah. Right, so yeah, just to like balance off, and once like China Water Affairs drops further down to my cost price, right, I can sell these two companies to buy back my China Water Affairs shares. So yeah, just like balancing out basically. The SIIC is also a new addition to my portfolio. I'm using or my CPF money to invest into SIICC environment, just because, you know, again, this is a very safe safe company with good growth, very similar to China Water Affairs Group, and they're paying me a dividend yield of 6.25%, which is great as compared to the returns I can get on my CPF, which is about 3.5 or 4%. So yeah, as long as I can beat those returns, right, I'm very happy, and this is quite a safe way to do so. So yeah, just great. And I'm not even talking about the capital gains over here. Just by the dividends I can beat those returns. So that's the reason I went for it. DBS is a very small position. I just can't sell it at the moment because it's an odd lot, just 5 shares. I need to have 100 to sell it. So yeah, Ping An Insurance as well, I think they had a very good earnings as compared to what was happening last year, right? They had great earnings. I think they grew more than 10%. And after the preliminary report came out as well, the stock price jumped. It went up to $67 if I'm not wrong, but it's back down after what's happening in the past 2 days. Baidu, same thing, great earnings, great news coming out on what they are doing, and the pipeline is very strong for their products to roll out. They're going to introduce their first EV vehicle in the second half of this year. Sales will start next year, so a lot of revenue to be generated from there. At the same time, they introduced a new partnership with Geely on their autonomous driving, AI, cloud, and mobility as a whole. They also have partnered up with BYD to supply them with all the autonomous driving tech. So you can expect autonomous buses rolling out from BYD, supported by Baidu's tech. JD as well is holding pretty strong. Like it was all the way, it has remained about $280, $290 a share. But you know, last 2 days have been horrendous as compared to Alibaba, right? Alibaba obviously has seen our downfall as compared to JD. So that was the reason I actually got into Alibaba as well. It's a new edition, so I thought, like, you know, because of the disparity, right, Alibaba has been fallen more than JD, I can buy into it, and as things balance off, I will sell Alibaba and get it back into JD. So I'm not planning to hold Alibaba for so long. It's just there because I wanted to just take advantage of the disparity. Yeah, so as soon as, like, you know, I see some benefits out of Alibaba, I will sell it to buy JD eventually. I'm not saying Alibaba is wrong or it's a bad investment or along that line. I think it's whatever it is, it is. And if you want to invest, please go ahead. I don't judge that. It's just that it doesn't fit my portfolio and what I'm planning to do with my portfolio. So I've made a dedicated video on that, Alibaba versus JD. You can go and explore that to understand more. Then we have Ping An Healthcare, which has obviously seen a massive drop, 65%. But I will be investing more into it eventually when I have the cash to do so. Not now. I think it's a bit misunderstood at the moment with what is happening with the clampdowns and yeah, generally all the data and data protection and everything. But I think this is the tech which is very necessary for Chinese growth and Chinese healthcare sector's growth. So I will pump in more money as I have it. It's gonna take a long time to recover, but I have a strong feeling that it will. KBBM Holdings, just very stable. It's stuck at 35 cents a share for a long time, and it will stay there. I want to buy more of this just because it pays very well, 15% in yield. And I was thinking to sell my energy stock, AEG Energy, as soon as it like grows over to HKD a share. It's currently at $1.35. I will sell it and get KBBM Holdings. So yeah, that's the plan. But like I mentioned, right, with international energy stocks rising rapidly because of the cost of the price of the commodity, underlying commodity is rising, right? But China, this is China-based company, and their business is limited to China. So as China won't be seeing any rise in the energy prices, so that's why the stock price is also not showing some substantial increase. So yeah, the other two are simply the funds that I'm investing through my CPF as well. I've not updated the price, so they should be lower than this. Basically, they are tracking the tech companies of Greater China and also the small cap in Asia. So yeah, that's another thing. Currently, I'm standing at $577 per month on my dividend income. And the another thing I started this year is to start understanding the options a little bit more. I do understand what they are on the surface level, but I wanted to start nibbling with it to understand and grow as an investor, right? I think every year I want to try something to understand a bit more about it and learn and grow as an investor. So this year it would be options, and I started to nibble around with this. This month I'm projecting to make $95 from that. So it will be just supplementing my dividend income, right? And increasing my monthly payout from stocks that I hold. And I'm being very conservative about it. So far I have sold like put options and sell options on Ping An and Baidu. So I'm trying to be very conservative. For my call options that I sell, I always sell it above my cost price. So even if it gets sold out, right, I don't lose anything. I only make a bit, and if it fluctuates down to below my cost basis, I can buy it back. So that's the thing. But basically, I'm only taking it to like get the fees, take the fees. I'm not sure what it's called, the options fees, just to collect that. So I want the contracts to expire worthless. For for selling of puts, I'm basically putting a very low number to it. So for Ping An, it's $47. So I'm perfectly happy to getting assigned on that order. At $47 is a great deal, a great dividend as well, over 5%. So yeah, I'm perfectly happy at getting assigned. But if it expires worthless, I still collect the fee. Same goes for Baidu. My sell option is sold at 170 HKD, and my cost basis is 165. And my selling of puts is at a strike price of 130 HKD, whereas the current price is 140. So yeah, same concept over here. Being conservative, hoping that the contracts will expire worthless and I can collect the fees, and that is the goal over here. Eventually, when I start working right, I want to be in a position where I can have some emergency fund. I will start accumulating some cash, so I have a cash reserve in case I get assigned or whatever not, and that I will be more comfortable in getting the range closer to what the current price is or what my cost price is. So yeah, that is in the future how I will approach options. But right now I'm trying to be very conservative and only taking the risk that I'm not even the risk, but like selling the puts that I'm okay being assigned, and selling the calls which I'm happy to let go of the shares. So yeah, that is all for this video. And let me know what's happening with you guys down in the comments below, or you can join my Discord. But until the next one, ciao.